Hello from Trend Signal for our review of the data and events the week beginning the 7th of March. Following the strong non-farm payroll data Friday, the Far East markets were mixed overnight with Hang Seng and Nikkei lower. Shanghai and Australian markets were higher, but the risk-on move continues apace generally, continuing the theme, I guess, over the last 3 weeks with equities up, bonds up and down last week, US dollar down, gold up, and commodities in general up sharply. The FTSE, Dow, S&P, DAX, and the Nikkei, in fact the Nikkei rose quite sharply, 826 points, over 5%, but all the other major indices were up, comfortably up last week. The other big moves last week, sterling, very strong, 3.5 cents higher against the dollar last week, largely a result of the fall over the last 8 weeks, really. The Brexit fears probably a little bit overdone, but they will ebb and flow with the poll readings and various goings on that particular debate. Other markets, gold $37 higher, 3%. Oil eventually basing. Not the easiest of trades to manage with the risk there, but up $3.60 last week on UK Brent oil. That's 10.5%, no less. Copper, one of the most important base metals, up 150 points, or just over 7%. So some big moves there. UK mining index experienced a very strong week last week, not surprisingly, with Anglo American up 32%. Yes, 32% in 1 week. And base metals moving higher. In fact, the share price nearly trebled, or has nearly trebled, I should say, since the low in the latter part of January. BHP Billiton, a more substantial and diverse miner, also rallied 21% last week. Extraordinary numbers, really. Comfortably the best showing this year and the best weekly move for several years. And in fact, look at these records, the biggest percentage move for 2 decades for 1 week. So some extraordinary moves there. Not surprisingly, that obviously benefited, as I say, the mining index here in the UK, helping the FTSE rally over 100 points last week. The markets in general continue to test the central bank resolve, whether it be the Fed, ECB, Bank of Japan, or indeed our own Bank of England. The worry for markets is that the continual central bank soothing creates additional risks for the markets as investors and traders all sell when the risk tilts higher. And with no liquidity, even in usually highly liquid markets, the potential for some colossal moves are clear. However, as we all know, the Fed, ECB, etc. will continue to come to the market's rescue. All this in the hope that the markets will one day achieve their own escape velocity, as someone described it, and not need the support and largesse of the central banks. Well, that time has definitely not come yet. Projections are for further cuts in interest rates in both Europe and the Far East, and even in America, where economic data has been somewhat brighter, projections are for the next rate rise put back to October or later. Only 4 weeks ago, we had talked that the Fed could cut rates and would consider negative rates. Well, that was then and now is now. Non-farm payroll data, consumer data suggests the US economy will not go into recession as some had feared. Jobs growth, certainly witnessed from Friday's non-farm payroll data, consumption and inflation have all held up despite the collapse in the energy sector. Data and events this week, well, obviously all this talk about central banks, I should say, brings us on to data and events for this week. And this is another week for central bank watchers. Let's have a look at the calendar now. The Bank of Japan's Kuroda speaking, Mark Carney from the Bank of England, Canadian and New Zealand monthly policy meeting. And to cap it all, we have the all-important ECB monthly policy meeting this Thursday, where expectations are very high for action. And so the ECB, the first meeting since January, February, I think we skipped one without a meeting, and like a spoilt child, I think is a good description. If the markets don't get what they want, they go into a bit of a paddy, and with a sharp sell-off would be the reaction, to be followed by sort of soothing and placatory words from the ECB. With the Eurozone slipping into deflation last week, again, negative 0.2%, and with fairly anemic growth data, I suspect that Mario Draghi and the ECB will have to be true to their word, and we expect to see a cut in the deposit rate deeper into negative territory, whilst perhaps, and it's only a perhaps, also increasing the amount of monthly QE by 10 billion. We expect the deposit rate to be cut from negative 0.2 to 0.4. The increase in QE, I say perhaps because it could be a problem due to the fact that the current programme could be at risk of running out of eligible assets to purchase, which, if they increased it by 10 billion a month, would only make that problem worse. So that's what the market is expecting. Anything less, and we might see a negative reaction if the ECB only do half measures, and we had a little bit of that at the end of last year. We will see equities fall and the euro rally. So has the market priced in the full impact of the ECB and what the ECB is expected to do? I'd say the market had largely priced it in, but I think profit-taking and position squaring caused the euro to rebound at the end of last week, which could be seen as partly US dollar weakness as much as euro strength. But equities, of course, in Europe will react to the news, but are still a bit sensitive to the euro's strength or weakness. So that's Thursday out the way. Other than that, it's fairly light on the calendar. We have some important Chinese data this week that will attract a bit of attention. Tuesday, we have trade balance data. Imports fell sharply in January, and a rebound in prices in February will help that data. Certainly commodities have rebounded quite sharply, as just discussed. But the trade balance may not make particularly a good reading. Wednesday, as I've already mentioned, we've got the Bank of Canada monthly policy meeting, and then in the evening, the New Zealand Bank monthly policy meeting as well. For both of those, we expect no change in monetary policy. Then finally on Thursday, we have Chinese inflation data. January figure expected to be unchanged from December number, with the growth remaining at plus 1.8%. But most importantly, this week it's the ECB monthly policy meeting and expected additional monetary easing that we expect to see on Thursday. So 12:45 Thursday afternoon is the important time. Thanks very much. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.